I think it's important to understand that because of the enormous increase in house prices, primarily in this country and in a lot of countries, people's financial positions now are very largely a function of the decision of how much debt their parents or their grandparents chose to take. Okay, so I wanted to start with explaining the relationship between debt and money, because we did a video a couple of months ago called What is Money, which a lot of people watched. And in that video, I basically explained that our modern monetary systems, the money system of the UK, the US, of Europe, or basically the whole rich world at the moment, is a debt-based money system, which means that money is debt. And what I said at the beginning of that video was that if we added up the total amount of money in the whole of society, it would add up to zero. And that is because we have a debt-based money system, which means that for every one person with £1 of money, there has to be somebody somewhere with £1 of debt, and it cancels out. I think that can be a little bit confusing for some people when we think about it from the money perspective. But now we can look at it from the debt perspective, and I think that makes it a bit clearer, because it should be easy to understand that the total amount of debt in society is equal to zero. And the way that you should be able to understand that is because we know that it is impossible to be in debt without being in debt to somebody. So if we add up the total amount of debt, it will equal the total amount of money owed to somebody. The amount of money that everybody owes is equal to the amount of money that everybody is owed. And that is because every debt has somebody who is in debt and somebody who is in credit. And we're going to use that term credit to refer to having money owed to you. So if I borrow £100 from Simran, then I have £100 of debt, I'm in debt, and Simran has £100 of credit. He is in credit because I owe him money. So this is the first thing, that debt adds up to zero. And it's obvious when you think about it, because you know that if you owe money, then you owe that money to somebody. It is impossible to owe money to nobody. But I think as much as it's obvious when you think about it, very often in our conversation about debt, it becomes clear that we don't really think about it. Because, for example, we know in the last 3 years that the UK government debt has increased by £700 billion. That's very clear. We can check that. We know that the US government debt has increased by $8 trillion. $8 trillion. And yet we very frequently act as if that money has disappeared and not gone anywhere. And that is impossible. That's not how money works. That's not how debt works. If the UK government has gone £700 billion into debt, we know that somebody must have accumulated £700 billion of money, because that is how debt works and that is how money works. It's always a perfectly balanced system. If somebody is in debt, somebody has money. If somebody has money, somebody is in debt. We have a debt-based monetary system. Debt is money, money is debt. The total amount of debt adds up to zero. And I think this is super interesting because, in a sense, as soon as you understand this, you understand our current economic crisis much better, which is that, yes, it is true, our government has gone £700 billion into debt, into more debt than it was already in. The US government has gone $8 trillion more into debt, but those debts are to somebody, and the money that the government has spent to go into that debt has gone to somebody. If we were to find those people who have that money, we will see that they have gotten enormously richer. If we were to tax it back, the government debt would decrease. I think it's often when we think of debt, we think of it as sort of wasted resources, resources that have disappeared. We say the government has spent that £700 billion, it's gone. That's not how debt works. If the government goes into debt, somebody goes into credit, and we can match these things exactly. We know with certainty that it will match up. And I think when you sit and think about this, it's actually quite amazing, because the total amount of debt in society is so enormous that it's almost difficult to believe that that money is owed to someone and somebody has that credit on the other side of that. Because the government debt alone in the UK is £50,000 for every UK adult. It's enormous, £50,000, which means that the average amount of money held in the form of government bonds must be £50,000 per adult, and it sort of blows the mind who has that. That's just government debt. All of the mortgages, your mortgage, your friends' mortgages, your parents' mortgages, your children's mortgages, every single mortgage is owed to somebody. And I think that there's sometimes a slightly misleading understanding that this debt is just appears and is owed to nobody. But in reality, all mortgages are owed to somebody. And even though your mortgage is owed to the bank, banks are in most cases just intermediaries. Ultimately, they are lending you money that comes from their depositors or from their investors. So all of this money, all of your mortgage money, all of the government debt, all of the student debt, which is massive, especially in America, is all owed to somebody, credit card debt. And I think when you consider just how much debt there is, it becomes almost hard to accept. I remember the first time this sort of thought occurred to me, that, all of this debt is owned by somebody. And the people who own that debt, they often own it in the form of money. So let's talk about what the debt looks like to the owners of the debt, the people who are in credit. It looks like holding bonds in an investment account. It looks like holding bonds in your pension. It looks like holding money in your bank account. So if you have money in your bank account, you probably think you just have money, but what actually happens is the bank lends that money out, and essentially that money in your bank account is somebody else's debt. It is money which has been lent to somebody, and you are a money lender, you are someone who is in credit, and you're on the other side. So I think it's worth realizing that all of this money is owed to somebody, and somebody has all this money, just simply because the amount of debt is so enormous. And I think we often sort of just internally assume that debt just is to nobody. The debt's to aliens. We're in debt. Everybody's in debt. That's impossible. Society as a whole has to have a total debt of zero. And the reason why it seems impossible is because ordinary people tend to be on the debtor side of the coin. So you have your share of the government debt, you have a mortgage, but not many people have enormous piles of cash in the bank or enormous investment accounts of bonds. And that is because of society, the inequality in society. So bonds and credit tend to be overwhelmingly held by richer people. Now, we will get some people commenting, and it is of course true that if you have a pension or if you have a large bank account, you are in credit. You are one of the people who has the credit. But if you look at the overall distribution of credit, of money owed to people, it is overwhelmingly owned largely by the richest people in society. Of course, there will be some owned by, for example, pensions and things like that. Another comment we get is that we owe all of this money to China or to foreigners. And it is, of course, true that the UK as a whole does have a debt to China. It also has a debt to Japan. But most of the debt is owed internally. And there's a situation happening where increasingly financial assets are owned by a kind of international super elite, and they own the debt of many, many countries, which means that there are very wealthy people to whom money is owed by British people and the British government. But there are also very wealthy British people who will have the credit of foreign governments and foreign people. So don't allow yourself to be sort of lured into this trick of, well, the money is all owed overseas, because overseas people also owe money to British wealthy people. The reality is more a situation of ordinary people and ordinary governments are in debt to a kind of international super rich elite, of which many are British and many are American, because America and Britain and Western Europe are rich countries and they are creditors. The money is largely owed to wealthy people in the rich world. And of course, what is important to understand is that every year, every month, every day, the people who are in debt, which is you if you are a taxpayer, which is your government, which is you if you have a mortgage, pay money to the people who are in credit. So every single day, a big chunk of your taxes goes to the wealthy debt holders, and a big part of your mortgage payments go to those people as well. Now, the next thing I want to explain is a little bit tricky, but I think it's important to understand the function that debt plays in our economy, which is that debt is a form of ownership. And I think the best way to understand this is to consider the way in which corporations finance themselves. So we tend to know about shareholders, which is if corporations need money, they sell shares, they get money from the shareholders, and the shareholders give the money to the company that it needs. But in actuality, corporations choose largely between two ways of raising funds, which is selling shares to shareholders and selling bonds, which is essentially borrowing money from wealthy people who want to lend money. And in many cases, they take more than 50% of their funding from people who lend the money to them, to creditors. So when you are running a corporation, you have a choice between how do we raise funds from stockholders or from bondholders, who are the people who lend the money. And when you think about it like this, you realize that stockholders and bondholders are really not that different. They are both people that give money to a corporation and then take a share of the profits of the corporation. The way in which the profits are shared is different. So the company first has to pay interest to the bondholders. Then, if there's any money left, it pays the rest of the profits to the shareholders. But in a sense, it's not that different, right? If you are a bondholder or a stockholder, you give money to the company and they give you a share of their profits going forward. So we consider often in our mind the stockholders to be the owners of the company. But in a very real way, stockholders and bondholders are not that different. And it's the same if you own a house. So obviously, if you buy a house, you think you own the house. But if you buy a house using a huge amount of debt, then really your situation is in many ways similar to when you were still renting, right? Of course, there are differences. You can choose what to put on the walls and things like this. But if you're renting a house, you live in the house and you have to pay a chunk of money every month to the owner of the house to live in the house. If you're owning with a mortgage, you live in the house and you have to pay a chunk of money to the moneylender every month to live in the house. So I think it's important to understand that really debt is a form of owning assets. It's not that dissimilar to simply owning that asset and renting it. And in both cases, you'll see if you stop making the payments. So if a corporation stops making the payments to the debt holders, what will happen is legally, the debt holders will be given possession of the company because debt is a form of ownership. And if you stop paying your mortgage, what will happen is your mortgage lender will take legal possession of your house because debt is a form of ownership. And I think it's important to understand that basic fact, really, that debt is a form of ownership. And if you own an asset with a large amount of debt, essentially what's happening is a wealthy person who has the money to lend you is buying the asset through you. And of course, debt is not the same as ownership, right? If you own the property with debt, you take the price risk on the property. If the price goes up, you make that money. If the price goes down, you lose that money. Also, you have the legal risk. So we have a situation in this country where a lot of people bought property and then found that they had to upgrade the cladding on their property and the owner had to take the loss on that. So if you own with debt, then you take price risk, you take legal risk, and you also have to manage the property. But in a very real sense, if you have to pay to use that thing, be that through not owning it or through having debt, you do not own that property. So debt is a form of ownership, and it is a way of rich people buying assets and not having to worry about the price going down, not having to worry about management, not having to worry about legal risk. Really, if you think about it, from the perspective of the wealthy lender, he's kind of running a business. He's saying, look, I have two ways of owning property. Either I buy it and I rent it to you, but then I take the risk of the price falling, I take the risk of damage, I take legal risk, or I lend you the money and I probably won't make so much money on it because interest tends to be cheaper than rent, but you have to take the risk of price falling, you have to take the risk of any damage or legal problems, and you have to manage the property. So really, and I've said this many times, but I think it's interesting to understand, debt is a form of ownership. It is a way of wealthy people owning assets and having you manage them. So in a way, this way of owning assets through debt is quite good for the rich, right? Because I don't have to worry about if the price goes down. I don't have to worry about managing it every day. I don't have to worry about any legal risks. You manage it for me and you still pay me the interest every month. I don't have to do anything. It's pretty fantastic way of owning assets. And yet, people overwhelmingly prefer to own their property, even through a massive amount of debt, than renting. Why is that? So there are a couple of obvious reasons why people prefer to own with debt rather than to rent, such as, you can make your own changes, you can, paint the walls, these kind of things. But let's try and focus on only financial reasons, right? Why is it that people prefer owning property, even with a huge amount of debt, to renting property? The primary reason, in my opinion, why people prefer that is because in the last 30 years, property prices have gone massively up. And as I said when I spoke about debt as a form of ownership, when you own with debt, you take the price risk. So if prices go down, you lose money. If prices go up, you make money. And in the last 30 years, prices have gone up massively. So buying assets with debt has been a really, really good financial investment for people in the last 34 years. And for that reason, I think we've kind of internalized this idea that taking on debt to buy assets is good because prices always go up. And I think an interesting thing is happening here, which is that basically people who, I think it's important to understand that because of the enormous increase in house prices, primarily in this country and in a lot of countries, people's financial positions now are very largely a function of the decision of how much debt their parents or their grandparents chose to take. So if my parents had chosen to take on 4 mortgages or 5 mortgages, they would be much, much richer now than if they did what they actually did do, which is to only take 1 mortgage on a small house. And we've created this quite interesting set of financial outcomes where we've really, really rewarded people who took quite risky economic actions, which is to take on huge amounts of debt and to buy huge amounts of assets and take huge amounts of price risk. But they have made money because prices have gone up. And I think those people often think that they've made money because they are very effective property investors. But it's probably worth realizing that in the last 20, 30 years, it's not just property that has gone up in price. Basically, every asset has gone up in price. And in most cases, the stock market has outperformed the property market. Depends what country you look, but in most cases that is true. We've also seen massive increases in land prices, luxury art, luxury cars. So what has really happened in the last 30 years is anybody who bought a ton of assets will have made money. It's not actually about property prices rising. It's more about asset prices rising in general. And this brings me to my final point, which is the reason that people who have taken a lot of debt have made a lot of money in the last 34 years is not really because asset prices have done well, but it's because money has been devalued. And since money is debt and debt is money, debt has been devalued as well. So anybody who took a huge amount of debt and then saw the prices of everything go up, essentially have made money on the fact that they took debt and that debt has been devalued. So people who think they made money in the property market, they would have made just as much money if they borrowed money and bought stocks or borrowed money and bought land. So what they really made money on when you look at it is they made money on their mortgages. So we've created a country of people who thought they made money property speculating, but really they made money betting on interest rates, essentially. They made money betting that money would be devalued. They made money essentially shorting the value of money because they borrowed money and then they sold the money and then the value of the debt went down. So I think it's quite interesting in a way that we've created this financial incentive structure that really rewards people for taking debt, even though taking on a huge amount of debt is not a particularly sensible thing to do. So, I'm going to put a video out after this one about why money is being devalued. I think it's very true that money continues to be devalued in our society. That means debt will be devalued. That means people who have taken large amounts of debt will continue to do well. But it's important to understand that it's a phenomenally risky way to make money. And increasingly, it's only accessible to richer people. If you're a poor person, you can't get a mortgage, you can't buy a house, you can't do this thing of taking on debt and buying assets, which has made a lot of people rich. Okay, so that's debt basically. Debt is the opposite of money. As debt has accumulated, money must have accumulated. This is not really well understood in the media. A lot of sort of stupid things have been said, like during the COVID crisis, when the government was going massively in debt, the media was saying, we're going to have an economic boom because people are accumulating money, people are accumulating savings. Other people would say, once people spend their savings, then the economy will go back to normal. But once you understand that debt is money, savings are debt, you will understand that if the government goes massively into debt, like it did into COVID, somebody has to accumulate money. And it's impossible for society to get rid of that money unless the government pays down that debt. So I really want you to understand the symmetry here between debt and money and debt is the same thing. And I think what that allows us to see is the COVID experience in a different light, which is when the government goes into debt, somebody has to benefit. And if the government is now in a situation where it can't pay for basic services, that is because somebody has benefited. And that's why I continually harp on this channel about who has the £700 billion. It would be enough that £700 billion to give £14,000 to every single person in the country. So when the government goes £700 billion into debt and you don't get £14,000, it's effectively the same as the government taking £14,000 from you and giving it to the rich. Okay, so that's it. Debt is money. Money is debt. The government has gone into debt. The rich have accumulated a huge amount of money. That has led to a massive increase in inequality. The last final point I would like to add is that debt is not the only form of wealth. There exists real wealth, property, land, natural resources, factories, productive machinery, and who owns these things is important as well. So debt is extremely unequally distributed, but I think sometimes people focus on the debt system and the monetary system as the only source of our problems, but we also have phenomenally unequal distribution of real resources. And yeah, that all needs to be fixed if we want to deal with the cost of living crisis, because inequality has increased and you are seeing that falling living standards for ordinary people. Okay, that's debt. Thank you. Once you understand that debt is a form of ownership, you also realize that debt kind of obscures true ownership. So, for example, the government wants to keep people owning properties, but it's difficult for people to afford properties because people are getting poorer and poorer. The only way that they will fix that is they will put ordinary families more and more into debt. So you see they'll have more 100% mortgages, might even be 110% mortgages, longer term mortgages, right? Much bigger mortgages. So you still own the property, but you have way more debt. And then people feel happy because they're in the property, but they're in debt. They're much more in debt. You see, so in a sense, debt is confusing because people don't, it means that you can lose your home without realizing you've lost your home. Because you still are the technical owner of the home. But now you're £500,000 in debt, right? Or maybe £1 million in debt. If house prices go up more, you know, in 20, 30 years, the average British family will be £2 million in debt on their house. But they'll still own the home. You know what I mean? Or, you know what? And really interesting thing is if you look at the situation of the government, right? So the government still owns the hospitals and it still owns the schools. But if you look at the total amount of government debt, it is now bigger than the total value of all government assets. So in a sense, does the government really own the hospitals and the schools? It has to pay so much interest on the debt that it's raised to own them. Do you see what I'm saying? So you need to really what you need to consider is your net wealth, total assets minus debt. And if you're keeping your assets but your debt's going up and up and up, in a sense, what's happening is that is the rich kind of employing you as middle management to manage your own house, which they really own. You see what I'm saying? And now, increasingly, a big chunk of your taxes is going to pay government interest. You know, if the government didn't own the schools, but it didn't have the debt, you'd have to pay rent for the government to rent the schools. It's the same thing. It's the same thing. So debt obscures true ownership and sometimes confuses people about the real situation about who owns things. And what you are going to see now going forward is the government is more in debt. Ordinary people are more in debt because house prices are higher. But you still own it. You're still the owner. Don't worry, you own it, but just pay us all of your money to be allowed to own it. You see what I'm saying? It's quite interesting. In a sense, owning with debt is very, very similar to renting. Very similar to renting. But of course, house prices always go up, so you're going to be fine.